So, where exactly is the market going? Probably over the last 10, 14 days, you've been wondering, well, what's going on as the market has gone from 2,600 on S&P all the way to almost 2,700 and some change. Well, I drew some snowballs here, and I wanted to point out the direction of the snowball effect that's about to take place. Now, today is April 19th after the market close, so these graphs are at the end of the market close on April 19th, 2018. So, now, there's no such thing as snowballs. I just kind of use this color and they look like snowballs, but I guess it's not a bad analogy if you're trying to determine where the market is actually going. The most crucial thing on this graph to me is the fact that the way the market has rebounded this last time is quite different from the way the market has been rebounding in the last 9 years. And here's what I mean by that, okay? Typically, the strategy of buying the dip has been very successful over the course of a number of years, but in my opinion, it is no longer valid in the current market environment. The last time buying the dip was profitable was right here in February, okay? And the characteristic of buying the dip, if you analyze the last 9 years when the stocks have retraced back to a certain extent, maybe 5%, at some instances been as much as, 8% or so, it's been a great idea to buy the dip because they would rebound quickly, just as this part of the chart illustrates. However, it is no longer the case because this time we had the dip around the April, and you can see clearly, the market has just been hovering around this orange line, which would be a 200-day moving average, and it's been there for quite some time. So the difference is this. Here you see a sort of a flush all the way lower, significantly lower in one day, which in this case was February the 9th, followed by significant move almost immediately higher and a fierce rebound all across the line, all across the 50-day moving average. Now, this has not been the case the last time the markets were pointing or reaching close levels to the levels reached in February 9th. In other words, now that the market is falling to this range right here on S&P to around the 2,600 level, people are no longer in a rush to buy stocks at this level, which here when the stocks fell to this level, people rushed in and they bought. And when I say people, I technically mean the institutional investors because they're really the only ones that dictate the significant price movements in all stocks. So they trade in millions, billions of dollars, and so they're the ones that really determine where the market is going. I'm not talking about individual investors here. So when institutional investors on February 9th rushed in and brought the market from minus 1,000 points to plus 200 points roughly that day, we're no longer seeing that action. And what that tells me is at this price level, institutional investors are no longer considering stocks to be bargains. Now, that is generally speaking, not to say that, there's always a few stocks in the marketplace that are regarded as a deal by institutional investors, and they have to invest money somewhere, so they will try to identify certain stocks to place the money in. But generally speaking, we're seeing a lot of these red bars on high volume, which really is a characteristic of a huge distribution. In other words, there is a lot more sellers rather than buyers at this level. Now, the snowball effect that I wanted to point out is a phenomena I have discovered that when the stocks rebounded, this is how long they've been able to manage to stay after their significant drop down here on February 9th. They've rebounded. This is how long they've been able to stay above this blue line, this 50-day moving average. So we're seeing a number of days, close to the range of 10 days to 14 days right here, this period right here. Now the markets fall lower, they rebound again, and now we're seeing sort of a smaller time frame where the market is above this 50-day moving average, this blue line. Now, the last time, which is last few days, specifically April 16th through April 19th, we're observing a totally different situation where the market, the moment it reached this level of 2700, 2720, it almost immediately pulled back to this 50-day moving average line. In other words, here, there were still some buyers supporting this price level, and so the longest time frame was on the first rebound. Now this time frame of staying above the 50-day moving average is slightly decreased, and this time the moment we get above that 2700 on S&P, we're not even able to hold that level at all. Okay, in other words, we've seen a lot of struggle right here at the 2700. We've seen a lot of struggle right here at the 2700. There is no struggle. The market is just like, boom, we're done. Nobody wants to buy here, so it's fallen. And a good confirmation of that would be this right here. You see the accumulation distribution, okay? So here we can compare this stop right here to the stop in the accumulation distribution. Next time the market's trying to bounce higher, the accumulation distribution goes lower. Now the market is reaching this 2720 level, and there's no buyers there. Everybody is a seller at this point. Now notice this very interesting thing. These snowballs right here are sort of hanging on this top of the mountain, if you will, and they're very hesitant to roll over downhill. Well, notice that that rollover finally takes place, okay, and now we're at this point of the mountain right here. And let me see if I can draw this right now. Please try to acknowledge the steep drop right here. I'm going to try to draw this. Actually, let me take a different color here. This red, right? Notice the steep decline that we are about to experience right here. See the steep decline? Now, where that's going to take us in a situation which is known as death cross. In other words, I'm expecting from this level here, since the markets are not really fighting to hold this level of 2700, 2720 and S&P anymore, I'm expecting the snowball to roll down here, and it's going to do it relatively quicker than probably everybody expects. And if it does that, we're going to have the 50-day moving average cross this orange line, which is the 200-day moving average, in the near term. I would give it maybe 2 or 3 weeks. And once that takes place, this is known as a death cross. A death cross is a good indication of the markets or stocks or a commodity chart heading much, much lower. And so what we're seeing in the accumulation distribution is a confirmation of what's about to come. So at this point, in my view, there is no reasons to be bullish on the market. And I know as a trader, as an investor, these moves can be quite tricky. In other words, seeing the market in April hold this level of 200-day moving average, rebound here all the way, and every time you expect the market to go lower and just keeps going higher and higher and higher, what that does to your psychology, it makes you disregard all the facts that existed in the market 2 weeks ago, which is still true today, such as all the geopolitical tensions, such as all the possibilities of trade war becoming a significant burden on the economy for the United States, and therefore reducing the earnings of the companies significantly. There's all the uncertainties and all the challenges that were true right here when the markets were hitting a low of 25.70. They're still true right now when the markets are trading today on April 19th at the level of 26.93, 2700. Okay, so nothing has changed between here and here. And I know the media likes to portray the news as far as the earnings concerned, that the earnings are great, they're up 20%. Well, guess what? This is as good as things are going to get, because now the companies are getting all the help of the stimulus that's been placed in the last 9 years. They're getting all the help of now the fiscal stimulus through the tax reform, and this is as good as things are going to get. So from this point forward, the companies are not going to have an increase in their earnings. And if you understand a little bit how the markets work, when the institutional investors try to place their money, they don't place their money based on what the market is doing right now. They always look forward, and the investments are designed to pay off in the future. So knowing the direction of the earnings of the companies is not going to rise, it's only going to decrease. What do you think a lot of them are going to be doing, especially with the companies that are reaching or trading close to their all-time highs? Well, in my view, and again, I'm not always 100% right, but thank God I've been more often right than wrong, and that's how I've been able to trade these markets for the last 12 years. In my view, we're going to have a pretty sharp drop-off here, and which will result in a death cross situation and a further drop from there. Now, with that being said, it does not mean that the markets fall in straight line. However, I just wanted to bring this to your attention. The snowball effect is accelerating, and we will see an acceleration and further drops over the course of the next 30 to 60 days. The trend, in other words, if you take a measurement from the 50-day moving line right here to a 200-day moving line, there's quite a bit room right here when the markets start dropping. Now, over the last couple of months, you will notice this pink mountain, if you will. It's been narrowing. In other words, the distance between the 50-day moving average and the 200-day moving average is about twice less now than it was in the beginning of February, which tells us the overall trend is lower, which means there is going to be no further highs in the market in 2018, and the only ultimate direction of the market is lower, not higher. With that being said, it does not mean that the market will not go higher at all. Of course, there will be days when the market will go higher. It's inevitable. But there's going to be more down days, and there will be the percentage of the drop on down days will exceed the increase. Therefore, overall, the market will trend lower throughout the end of 2018. Now, you're probably wondering, well, okay, what do I do now? How do I profit from observing such an interesting snowball effect that is about to accelerate? Okay, so if you're in a situation where you're like, my goodness, I'm trading these options and the market is driving me absolutely nuts. It keeps going higher, it keeps going lower. I thought the market was going to crash, but it's not crashing. It looks like it's going higher. It looks like it's going to reach for the moon, just like Bitcoin was going to reach for the moon in December of 2017, right? So if the markets are getting you confused, this is what you want to do if you want to get results in 2018. You simply want to visit marketcrash.money. You want to click this big green button right here, how to profit. Schedule your one-on-one training consultation and get all the questions that are on your mind right now that might have been on your mind over the last 30 days, over the last 60 days, over the last 90 days. Whether you're looking to be a day trader or a swing trader, whether you're looking to put some long-term investments that will benefit you over the next 6 months, over the next year, over the next 2 years, regardless of what your situation is, if you're looking for more answers, if you're looking for more information, if you're looking for more timely strategies to take advantage of this market before it takes advantage of you, definitely click this big green button, how to profit. Take action now. I will talk to you soon, and make your 2018 the most profitable year ever.